You touched on Asia before.
Yes.
Lots of hope for stimulus. Do you think the Chinese equity markets, do you think that's an accident waiting to happen?
Well, yes and no. Every equity market is an accident waiting to happen, because one day the bull market is over and then it's not going to be just a 5% correction. But I'd like to say this about China. First of all, it's a huge country. People don't realize when 1.3 billion people suddenly wake up and want to buy stocks, and there's a lot of new accounts that are being opened. The market has been weak since 2007 and has underperformed the US by something like 80% over that period of time. So the Chinese stocks became relatively inexpensive as of July of last year. And then the Asian fund managers and global managers looked around and they saw the Philippines is up, Thailand is up, Indonesia is up, India had by then rallied already 30%, and so forth. The only market that was essentially depressed was China and to some extent Hong Kong. So money suddenly started to flow in, although everybody knew that the economy was slowing down. And my view was, yes, the economy, by the way, you have to believe in Father Christmas to believe that GDP in China grew by 7% this year.
What is it really?
The
5%?
true growth is maximum 5%. I would say between 3 and 4.
Now, the problem with China and the rise in the equity markets is the fact that so far it's really just predicated on stimulus, nothing else really. The problem is we've had some stimulus, it's not showing through in the economy. Here in the Eurozone we've had stimulus and it is showing through into the economy. So further stimulus, it's not going to help.
Well, I agree with you, but you understand, in Europe it's showing through after several years of very depressed economic activity. In China we had since essentially 2000 an economic boom, and it was interrupted in 2008, 2009 briefly, but then it bounced back very strongly, driven by credit. Now the credit injections will not have an impact on real economic activity, but they'll have an impact on the value of the yuan, the RMB, and on equity markets, because you understand, the money will flow somewhere. It won't flow into the housing market because that's yesterday's game. Home sales are down, prices are down, and land sales are down. The money goes into some speculative activity. It doesn't flow to Macau at the moment, into the casinos. It flows into the stock market.
Let's touch on another major economy quickly in Asia, Japan. Has the stimulus measures there worked? The yen has weakened significantly.
Yes.
Is the outlook better now?
Well, it depends for what. Stocks have gone up, the yen has gone down. Real incomes are down because Japanese households, they spend roughly 50% of their food on imported food. So that has all become more expensive. So economically, it hasn't lifted the standards of people. But what it's done, it's lifted the profits of corporations. But I'd like to introduce one thought about Japan, and this is the following. If someone tells you that the money printing will go on and you're Toyota, and you're about to invest, say, $10 billion in new plant and equipment, and you know the yen is going to go down, where will you rather build your plant, overseas or in Japan? I think actually the policies are destructive for capital spending in Japan and encouraging capital spending outside Japan.
Places like Southeast Asia?
Yeah, Southeast Asia, Mexico, the US, that, in states that are labor friendly and so forth. But they're not going to build additional plant and equipment in Japan. Plus, Japan, despite of the yen weakness, is still relatively expensive. It's not the bargain that Vietnam is, or parts of China, or parts of India and so forth.